I think that was what he said. 7:15, we'll call the meeting to order. Roll call, please.
Supervisor Gens.
Here.
Nudo.
Here.
Brookhouse.
Here.
Gamma.
Here.
Gashke.
Here.
Geertsen.
Here.
And Kirby. Here.
Let the record show that youth and governance are excused. Citizens' comments. This time we'll open the meeting up to citizens' comments. Any citizens wishing to speak? None. Any citizens wishing to speak? Any citizens wishing to speak? Seeing none, citizens' comments are closed. Reports from the chair, I have none. Thank you. Reports from the committee. Anybody have a report? Seeing none, moving on. A resolution authorizing and providing for the sale and issuance of not to exceed 18,575,000 general obligation promissory notes, series 2024A, and all related details.
Good evening. You have a copy of the sale report that summarizes the results from today's sale for the general obligation promissory notes. After the cover is the executive summary. There were a total of 16 bids submitted for the notes. Last year you had 11. 11 was outstanding. 16 is phenomenal. The final true interest cost after sale day adjustments came in at 2.8937%. The winning bid was submitted by FHN Financial Capital Markets out of Memphis, Tennessee. And the total net principal interest over the 10-year life of the notes came in $947,288 less than our pre-sale estimate. So following the executive summary is the bid tabulation, where you will see the results submitted by all 16 bidders. Very widespread bids in terms of geography, from all over the country, but very tight spread in terms of the winning bid and the high bid. But 16 bids again is a phenomenal number of bidders. Following the bid tabulation, in table 1 is just the listing of the capital projects. No changes to what was presented to the Finance Committee and County Board last month. We'll go through the financial tables. Table 2 is just the summary of your existing debt. Shows your gross principal and interest payments on the far left-hand side. Non-levy revenue sources that are budgeted, and then the net tax levy column. It shows your existing levy for debt service before we look at the impact of these notes and future debt issuance for capital projects. Table 3 is the final sources and uses for the notes. The final borrowing amount that was identified in the final resolution that was prepared and provided to you this evening is $18,575,000. We're able to downsize $205,000 based on the final bid results. So you get the same amount of money for project costs, but have to issue fewer notes to pay for them, which is always a positive outcome. Table 4 shows the breakdown of the debt service. We break down the debt service by the corresponding authorizing resolution, but all of the debt service is repaid by the property tax levy. So table 4 kind of continues on to 2 pages, but you'll see on the far right-hand side of the second page of table 4 is where we have the final principal and interest. There was a premium bid submitted. The portion of the premium gets deposited into the debt service fund to pay interest expense. So your net principal and interest was $22,327,155. Again, that is $947,288 less than we had estimated. Table 5 is the long-range tax impact analysis. It includes your existing debt and then models future debt issuance out through 2033. The debt service levy for the 2024 budget to the 2025 budget will increase approximately $850,000, which was the target that we were asked to hit by staff. So that was achieved. And then we just show for future illustration, future debt issuance going forward based on, funding other long-term capital needs. But again, the only thing you're authorizing this evening is the 2024 notes. And then the final financial table is the debt metrics. This really hasn't appreciably changed from what we presented last month. Just shows that with the future long-range debt service model, the county is still in compliance with all 3 of its primary debt metrics targets that we evaluate each time the county goes into the securities market. And then the rating report from S&P is attached for reference. The county's AAA rating was affirmed by S&P. Largely a glowing report. One thing I wanted to point out, is under kind of their general description and of the county's financial condition. They use the term exceptional to refer to the county's management of finances. That's not an adjective I see too often in a rating report. So very high praise for the county's overall financial management. So all in all, very good results, significant number of bidders. Interest rates better than what we had presented in the pre-sale report. So your action item is the final resolution. Again, the final borrowing amount is the $18,575,000. So I'm happy to answer any questions.
Supervisor Nato.
Well, just want to say, I wish we had $1 million savings, no joking, but I think that it's a big saving for what was projected. It's really good and we should be proud of it. The job that everybody did it. And with that, I'll make a motion to approve it.
Second's been moved by Supervisor Nato, second by Supervisor Geertsen to approve. Looking at table 5 in 2024, I don't see the number that we're at. Closest thing I see is over on debt service levy with 19 million.
Yes, so your levy for debt service, the 2024 budget was $19,604,335. That's projected to go for the 2025 budget to $20,453,32. So that's approximate $848,700 increase.
Okay.
So your tax rate per thousand presently on an equalized basis is 87 cents per thousand. In 2025, that'll be 83 cents per thousand.
Thank you. So I'm just gonna add to what Supervisor Nato said. I mean, when we went up to the bond rating meeting, I think that was a step in this direction, but I'm gonna go all the way back to when I started on the board with Joe Clark and the previous administrations and Supervisor Geertsen being part of the finance team. I think the finance team and the past boards have done a super job at getting us to this point. And I look at it as it's our cross to bear for the next 2 years to make sure that we continue this strong financial track of where it's been going to this point. So I think the budget and the bonding are the main goal of a county board supervisor, our main job. And I think of this committee, we have to make sure that we stay on the rails, excuse the pun, for those in the last meeting. But we need to stay focused on keeping this AAA bonding and being fiscally responsible for our taxpayers. So I think this report is absolutely outstanding. You get 16 bids. I've never seen 16 bids in all the time I've been here. 16 bids. And you look at the difference between the top and the lower, there's only one that hit 3%. Go back to we should borrow more money. But I say that every time we can get a phenomenal interest rate. I mean, this is really a good situation for Kenosha County. So with that, any other questions or comments? Seeing none, all those in favor?
Aye.
Any opposed? It passes. Thank you very much. Appreciate your work.
You're welcome. Thank you.
Remember us having more than 16?
I didn't hear what.
More than 16 bids?
I think we have.
Yeah.
I vaguely remember having, 16 is really good. And I see like, some of the financial advisors that would want to bid on us as our advisors and not have the competitive but privately placed, and I see that so often. And every single time we end up saving by bidding it.
That interest rate's lower than the average rate of inflation, so basically they're giving us money.
Yeah, free money.
Yeah,
That's happened a few times. This building we got for no interest, or actually the principal, was so much less than the rate of inflation with Build Back Better bonds that it actually mitigated the interest and even some of the principal. So
And that's why Jeff's not joking when he says borrow more.
yeah.
I'm not joking.
Well, we can borrow more money and put it in the bank and get highest.
Exactly.
When we built this first safety building, they didn't have all the arbitrage laws and we did that. And then they put a bunch of laws in place and you have to spend the money.
Been moved to adjourn.
Second.
Seconded by Supervisor Gaschke. All those in favor?
Aye.
We're adjourned. Thank you.